All right. I think we have Mayuresh as well joining us this morning. Mayuresh, good morning. Let's get a take from you on both the index and RIL.
So morning, Abhay. I think the market is brushing aside any concern that you've probably seen. What came out late Friday evening in terms of a trade deficit number. Again, the markets have taken no cognizance of that at all. And the expectation again is largely laid out on the domestic front with good monsoons, GST expected to get cleared. The markets are expecting reasonable amount of corporate earnings to come through on the global scale. Again, I think it's the same factors that we're probably looking at with a record number of negative bond yields that we're probably looking at across nations. You're probably expected to see huge amount of liquidity continue to the emerging pack. India greatly benefits because of a foreign reserve. So I think the entire story in the next still continues for India. And again, I think the positive momentum in the market is expected to continue. Reliance, again, I think excellent set of numbers in my opinion. But again, I think it's a long drawn out story. It's not a story that can be played on a couple of quarters or quarter on quarter. What you really need to see is the kind of capex that Reliance has actually undergone and the kind of fructification that this capex will have over the next few quarters. So I think it's really a story beyond FY18 for Reliance and kind of telecom capex that have done almost 1,50,000 odd crores. What kind of returns are they probably expecting from this business to come through? Back-ended as it may be, I think, what kind of an effect it will have on an ROEs, on the consolidated numbers, I think that is the point to be seen. So largely, I think it's a long drawn-out story, but I think impressive set of numbers by Reliance.
Well, just a thought on the trade deficit. Actually, trade deficits are not bad at all. I would rather think that if imports actually increased, it would show that our capital expenditure or capital expansion is starting to happen. So actually, the good sign in the number is the trade deficit itself really is meaningless. The imports actually decelerated by 7.3%. That's way better than they were decelerating at 18%, 17%. If imports can pick up and we can get 7-8% more in imports, that's a great sign for the economy. That means finally we are starting to spend on capital goods. We don't get that breakup of that data, and it's not merchandise. I'm talking about capital goods imports. It's a very positive sign for an economy. So trade deficit in itself is not a bad thing.
All right. Amit, anything else that's catching your eye this morning? Any of the other index names that you've been tracking?
No, I was just looking at Lupin. I think somewhere at around 1680, it's finding some resistance. So one can sell a 1700 call. And if it comes down marginally, one can unwind those trades per se. Yeah.
All right, Amit, thanks so much for joining us today. Mohit, from the pharma pack, actually, let me just see if anything's looking good to you. Sun gaining a bit because it's in the news against Spark, I think, this morning on that deal, on that license deal. We've been talking about some of those strategies with Amit as well. A couple of the other counters continue to be in the news. From the pharma pack?
Well, from the pharma pack, the only thing that's actually looking okay on the charts is Lupin. It's holding out above levels of 1650, 1660, and maybe we see 1700, 1730 on the upside. But broadly, everything is still sideways. There's no real clear breakout. Instead, what's looking good is the financials. So I have a few buy calls there. LIC Housing Finance is looking good on the charts and can move now higher towards levels of 545, 550. So that's a buy with a stop loss at 529. Also, Motilal Oswal I spoke about pre-market is moved up 4% today, and this can continue towards 415 to 420. So that's a buy with a stop loss at 398. Lastly, talking about IndusInd Bank, that also is looking good in the charts, and this can move higher towards levels of 1170 to 1180. That's a buy with a stop loss at 1128.
There's this stock MB Industries, EMMBI. Whenever it starts to make a move, usually ends into some kind of a freeze. So I'm just pointing it out to you, but please look at the technicals of this stock. Also, Lakshmi Energy and Foods. Can we bring it up? I think it was on some kind of a freeze yesterday. On Friday, we'll just put that one up. And the Shekhawati Poly Yarn. Can you just put that one up? SHEKA yeah, Shekhawati, Polyant. So just some of these stocks just have this tendency of running into a freeze at some point of time. So I thought I'll just bring it to you. And also GMDC, very strong charts can be put up. And Abha, you mentioned in the morning logistics. Gati is one of the stocks where you've got relative strength. We'll take a look at if the charts are also just fine. GVK Infra has just continued its run up. And then you have DCB, Gru Finance, as Mohit mentioned, a lot of the financial stocks, IndusInd Bank, Manappuram. Essentially, this rally is being really driven at the moment, at least, or the flavor of the season is really financials, perhaps not technology.
Absolutely. Mayuresh, let's get your view there as well from the financials. Do you see more of these PSU names, for instance, that have been taking center stage, driving more of the rally going ahead?
Now again, I think, Abhay, you need to really identify within the PSU banking lot specifically in terms of how the data points will pan out. And I think the entire rally is based on expectations that the recapitalization will be sooner rather than later. And again, the amount will be much higher than what the street is expecting. So I think the smaller and the mid-cap PSU banks, which are in dire need of money probably for their balance sheet stability and expansion, I think that's one trigger point. The second trigger point probably is the asset quality stability. And now the large expectation on the street is Q3, Q4, I think a large part has got recognized and the asset quality should start improving. But again, I think my own sense is that you should at least give a couple of quarters for the asset quality numbers to actually start coming out on the balance sheet in a more stable fashion. So in that sense itself, I think a few banks might report stable asset quality numbers and the stock might react positively. But again, I think the larger picture still looks a little bit on the softer side. I think I'm still expecting asset quality numbers to remain a little bit soft because we've not seen the entire recovery process properly play out. And if one really expects credit growth as well as the recovery in terms of capex to start from the second half, you might see the recovery probably happening by the latter half of this calendar year. So largely, I think it is based on these expectations that a whole host of activity is happening. But again, as I've always maintained, I think if one really needs to look at PSU banks, I think the top tier PSU banks, I think that is where the comfort actually lies because the capital adequacy is strong, the CASA ratios are strong, the tier 1 capital is strong, they do not need capital at this point of time. And the expansion again in terms of the branch network and again largely in terms of expectations of the entire cycle playing out can be more meaningful on the larger PSU banks.
Oh, I just wanted to bring Reliance, as I was mentioning in the morning. For Reliance to move requires a supply choke, which is supply has to go. And can you just bring today's chart? So, the initial buying always comes in from retail every time results happen. But you need to give it some time to stabilize. If there is institutional activity, maybe it will move. If it isn't, then it will just go back into its range. But anyway, 1050 if you're looking at an upside on this stock. Barak Valley Cements, can we just bring that one up again? Ashima, I think they do some denim stuff. So yesterday we had a 20%. You've got, and then TCI Finance and LT Foods. Again, if you want to check the fundamentals, I'll suggest please do go and read up yourself because you'll have to find your own interpretation on the charts. This is what LT Foods. You have a 3-month chart because this has been the strongest out of your Lakshmi Energy Foods and all Sita Shri Foods. A lot of these guys have been running up, but this one has been the strongest, so we'll put it up. Just and TCI Finance, if you have that also. LT Foods, TCI Finance, Ashima.
Well, as far as TCI Finance goes, it's still kind of cooling off, and I don't really like the chart as much. We want to trade above levels of 27 before we do go long, so I just wait off on that. Barak Valley, like we spoke about, is looking good in the charts and has moved higher. Just can continue towards 30 to 32 zones next on Barak Valley. A few stocks that are catching my eye are Apollo Tyres. That's given a fresh breakout, and this can move higher towards levels of 165. So this is a buy with a stop loss at 156. Also, Capital First is one that's trading at actually all-time highs and can move higher towards levels of 650 next. That's a buy with a stop loss at 615. Lastly, Bajaj Auto also is trading at all-time highs, and this can move higher towards levels of 2780 to 2800 zones. That's a buy with a stop loss at 2700.
Talking about auto. And let me get both Mayuresh and Mandar on this. We've seen a few of those select names move on the back of the monsoon as well, both in the heavyweights and the auto ancillary names. Mandar, anything from auto that's looking interesting to you?
Abha, as we have discussed, first is Tata Motors, that looks good. Second is Maruti. Ashok Leyland is another stock which looks good from an investment point of view. Is trading right now at support levels, so that's another interesting stock. M&M is also looking good, but I think I would wait for some more confirmations on that stock. But as for these three stocks that we have discussed, Tata Motors, Maruti and Ashok Leyland, all the three stocks look good from a short-term point of view as well as from an investment point of view.
Mayuresh, anything from the auto pack on your radar?
Again, I think largely a whole host of stocks have moved up in expectations of good monsoons and volumes coming back. I think that is one of the determining factors for auto stocks, but I think for the genuine demand probably to come back, our own perception is that the second half is when the volume activity will actually start picking up. So again, in terms of the numbers, I think two-wheelers expected in the second half to produce stable set of numbers. Two-wheelers as a pack is something that I'm probably liking. And within the auto ancillary space, if one really expects the passenger, the MHCV as well as the two-wheeler growth to be, I think, very stable, along with the industrial capex to pick up, I think a lot of these battery makers can be expected to do well. There might be some amount of push through in terms of input cost inflation coming back, but largely I think it's the volume story that will have an operating leverage benefit on their balance sheet. So I think I'll be looking at selectively auto names, but battery makers within the auto ancillary space and two-wheelers within the auto pack is something I'll continue to be optimistic about.
Mayuresh, good morning. Could you share with us what are you doing different from the rest of the market to get an edge in this market? Is there some different sector that you've looked at or an asset theme that the market may have missed?
Morning, Ashu. Largely, I think it's the same stories that we probably continue to like. But largely, I think it's going to be how you're probably going to time the market. Because if one really expects the market momentum to continue, our own sense is that a lot of these cyclical names, which can include auto ancillaries, real estate, cement stocks, can do well. But I think it's the earnings parameter that is extremely paramount in terms of how the trajectory will lie out for a whole host of these stocks. So if I may put it, I think it's nothing different that we're probably doing. I think our own expectations are two-wheelers expected to do well. A lot of these cement-related stocks, because the infrastructure push through can be quite significant for an economy like ours. A lot of these infrastructure-related stocks on the EPC side is a theme that we'll probably look out, because I think a lot of road players, for example, I think once these orders are given out, I think a lot of these EPC players will benefit. A lot of these EPC players also benefit from the fact that once the orders start coming through, I think the margin accretion on these new orders will be far greater and the working capital constraints start coming down. So I think EPC as a theme is something that we're liking within the cyclical cement, two-wheelers, and even selectively, I think some real estate stocks can be actually played out over the next couple of years.
All right. Fair enough. We've got an 11-month high on the Sensex today. That's on the back of RIL. Some gains in IDFC as well, with that FI limit being raised there this morning. Titan, GCPL, some of the other names from the mid caps that are still standing out somewhat as well. Let's see if any of those dairy counters are continuing to move today. Just get a look at some of those as well. And just a marginal up move, not too much. And same with sugar as well, not seeing any too much of a reaction yet. All right, gentlemen, thanks so much for joining us this morning. We're going to leave it there for now on this opening session, but we'll continue this conversation with Prasoon Gajri on the other side on Market Guru. Do stay tuned.